E-mini S&Ps finished the week higher, falling just short of that 3,000 level that they've been trying to get back to ever since the big sell-off in March. And at this point, they're building a whole lot of momentum on the opening of the economy, reopening of the economy, the ending of the lockdowns or phasing out of the lockdowns. And that positive momentum looks to be driving the market right now because they're certainly not looking at the economic data after today's jobs number. And they're certainly not listening to the other side, the rate side, when we're talking about negative rates. So at this point, the equity market seems to be leading a charge of momentum based on basically getting out of this lockdown, seeing the economy reopen, and obviously going back we went from 65 miles an hour to zero, maybe getting back to 30 would be a real positive. We're not quite there yet, but the market is pricing that in, that we're going to continue to see these lockdowns end, and that will continue to spur more economic growth that we so desperately need. If you look over in volatility for equities, the VIX index closed for the first time below 30 since this whole mess started back in early March. So we've kind of taken a big trip. We saw the VIX index spike higher and maintain that elevated level for quite some time. Now we've seen things over the last, say, 3 weeks or so come off pretty aggressively, and now we're back below we were when we started. So at this point, the picture tells you that, well, while we're not out of the woods yet, the forward guidance of the market is suggesting that we're going to continue to see these economies open up. We're going to see growth come back. And even if it doesn't come back fully, it's not going to be zero anymore. We're going to hopefully see some kind of growth. Now, expectations for GDP in second quarter are pretty low and pretty ugly. But at this point, we could see them reverse, or at least expectations for third quarter to pick up, which would be something very positive. Right now, the market is looking way down the road. It's not looking at today and tomorrow. It's looking second and third quarter for its guidance. So at this point, the VIX index suggests that smooth sailing remains in equities, but obviously we have a long way to go before we get there. Lastly, next week, look for this momentum to continue. Chairman Powell is going to be speaking. He's probably going to come out and talk about the negative rates, whisper that's been going around. The Fed has not wanted to go there. They want to continue to keep in place their policies which support the capital markets. Obviously, equities like that. We've seen that whenever the Fed gets over-involved in anything. We saw it in the financial crisis. We've seen it today. Stock market like that. It kind of eliminates a lot of risk. So you're kind of creating a risk appetite here when you keep the Fed involved. And they're going to be involved no matter how you shake it out over the next several years. This isn't going to go away in 1 or 2 quarters. So right now, smooth sailing ahead for the equity markets. They are going to hit a bit of a resistance in the E-minis. We get to that 3,000 level, but we crept ever so closer to it this week and likely will continue to push forward next week despite any negative numbers.